Welcome everybody to the October market update. It's Dave Keyte with Bend Relo. Going to start off with some really macro charts that just give a sense of, the environment for assets. Look at the stock market chart. This is a 5-year chart, nearly double from 2023 to 2025. Now, it's not the only asset that's doubled. Look at gold. This is not one we often look at when we're talking about real estate, but I'm bringing it up today because gold is $4,000 an ounce. I remember buying gold in 2008 after the collapse, and it was like $1,200 an ounce, and it just would never go up. Well, it's really made this huge move. It's doubled since in the last year and a half. This is 2024. Now, this is right around the time that AI came out, and in addition, it's right after we printed truckloads of money to get us through the COVID disaster. So people are buying these inflation hedge assets like gold and like the stock market. And I'm making this comparison because I'm saying that housing is similar to these. It's an inflation asset. So even though prices of homes have gone up, it's not necessarily the homes are so much more valuable. It's that the currency is less valuable that we're purchasing these homes in. Now, here's a little bit of a mortgage rate 5-year look. Obviously, we saw what happened. We're trying to kill inflation. But look where we're at. We're on the lows of this section of once we've gone up to the highs. We're now at the low end of this range. So anytime the market, this was last fall, the interest rates are on the lows, houses are selling better. They're not all selling great, especially if they're overpriced, but if they're priced well right now, they're gone. And so what we're really as an industry looking for is to see what's going to happen if and when we get past this 6th line, right? It never goes below 6, but eventually the thought is it will. And when it does, it's likely to spur a lot of activity in the real estate world, which has been on. We're going to break in the Beacon Report results for this month. And some big changes. We'll show you this all on the graph, but median days on market was up 8 times. We're trying to talk about that. And then closings, this is as high as we've seen in almost 3 years, and it's September data. So MLS listings, 765, these are starting to cancel and sell. This number continues to go down. 88 days on market, it's getting up there. And then look how many of these have changed price over half. So to dig into the specifics, I'm starting with this because this is the most important. Look at this number of sales each month, right? Volume. Market's been at a standstill, but boom, it keeps going higher. September is 180 closings. We have to go all the way back to September of 22. That's 3 years ago that we've seen this many closings in a month. Now, usually June is our busiest month, or June or July, but no, here we are in September with a busy month. What's going on? This is bucking the trend. This is a vertical trending line this year. Look how last year was super dead. This in 2023 just downhill. The whole year was downhill from May. Oh man, just brutal. We've had some pretty bad years in real estate as far as volume goes, and this is really interesting. Quiet resurgence, right? You don't hear about prices ripping higher, but finally people are coming back to transact. This to me is the biggest signal we've seen all year. Now, what else is interesting is I just mentioned price. Look at the median home price. Okay, this is right on the bottom of the last 3 years. It's kind of been in a range. We're on the bottom of the range. It's not like it's going down, down, down. We're just at the bottom of the range. Here's price per square foot. This is a little less distorted by the $1 million home sales that happen. Price per square foot, we're sort of this lower end of this range. So guess what's happening, people? Homes are selling, but they're not selling on that aspirational asking price. They're selling in the midpoint or below the midpoint of where you think the home will sell, where the range is. Real quick, looking at inventory, 4 months of inventory. This is a lot to choose from, but 6 months is considered balanced, and more than 6 months is considered a buyer's market. So we're not quite in a buyer's market, but we're also not in a rip-roaring seller's market. It's sort of balanced. Boom, look at this, days on market. So we had 180 transactions, but it took 45 days for those homes on average to go pending. Now you see how this is sort of getting in these fall, winter doldrum type metric numbers, this happened in February. So what this tells me, you guys, is 45 days, the homes, they tend to sit for a while. You go on the market, everybody's excited the first 2 weekends, and you got open houses, and then nothing happens for a month and a half on average. Keep in mind, some of these must have been 90 or 80 days, and then, so this is not just closing like that. It's taking some work on the seller's part. It's taking taking time and price adjustments. So to summarize the bottom line here, it's the busiest June, July, August, September boom we've seen since 2022. It's a big deal because it's a change in trend. Now, what's fueling that? Well, one, rates being on the lows of the year. That's a huge fuel to the fire. Two, there's the pent-up demand. And we'll get into that in a second, but sellers are selling with concessions now. It's not like sellers are just getting multiple offers. A lot of times they're having to cut their price. They're getting offers. People are asking for, $10,000 in closing cost credits, and they're asking for stuff in the repair negotiations. And sellers are giving it to the buyers because guess what? They want to sell. They don't want to sit there until next year and then sit there until 2027. So once you've made a decision for your family that you want to move, you just want to get it done with as little hassle as possible while maintaining your bottom line as best you can. So consulting with an agent who's doing business for best results is so important right now, since the lack of transaction volume compared to years past. You want to partner with someone who knows what's going on this month, this week, versus someone who hasn't closed the deal in 3 months. The market temperature varies. It changes so quickly around here. We've got the pent-up demand of nearly 4 years of contraction. March of 22 was when the rates started going up. And so that's 22, 23, 24. 25 is about to be over. That's 4 years. And then spring of 2026 is likely to be a busy spring after 4 years of people putting their life plans on hold, waiting on rates, waiting on prices, waiting on this, waiting on that. It's kind of like after a certain amount of time, you're just like, I'm done waiting. So that's what I think we're seeing going into the fall holiday season right now. It's just like people are saying enough's enough. And you can see that in the numbers of closings going up. Spring 26 is going to be lit. Sellers wait if you can until spring. But if you can't, you can still find a buyer. It's just not likely to happen at your aspirational price. Whatever price you thought about privately in your head, like, man, I'd like to get $1 million. Subtract 10% from that. That's where you should list. That's what we're finding is the instinct is homes are selling at about 90% of what the seller hoped they'd sell for. Conversely, buyers are getting homes at better prices than they thought they might have to pay. So you lose on one side and you gain on the other type of transaction. Lastly, housing is an inflation tracking asset. Median home prices will eventually be $2 million in Bend, and it might be sooner than we all think. Gold was $2,000 a year ago. Now it's $4,000. It's AI and the economy and the deflation and the money printing. It makes it so that if you're renting, you do not own a piece of this financial alchemy that's occurring. We encourage everybody who can, if you're comfortable with payment, to become a homeowner, because that is how most millionaires are created in this country, is through real estate wealth, both in your primary residence as well as properties. So if you or anybody you know is having a situation you want to consult on some life plans, myself or any Bend Relo team member will be happy to help.